from Massachusetts, Mr. Lynch, also the ranking member of the subcommittee.
Thank you, Mr. Chairman. Mr. Massad, I don't think we should overlook the lessons of the failure of Silicon Valley Bank. In that case, we had a stablecoin issuer who had a huge amount of deposits in a single bank, most of which was uninsured. Just months before the collapse of Silicon Valley Bank and Signature Bank, the Fed, the FDIC, and OCC released joint guidance cautioning banks about the volatility and vulnerability of crypto assets. The everyday American was largely insulated from the fallout of these bank failures, likely because crypto companies, likely because of the risk management systems and heightened capital reserve requirements to insulate most banks, and crypto companies had limited access to the banking sector. I have deep concerns about opening the floodgates for non-bank companies to our payment systems or for Fed accounts. Additionally, allowing crypto companies free rein could put pensions, retirement accounts, and other typically safe investment accounts at risk. The next crypto crash could have disastrous effects on the wider economy. Mr. Massad, what additional risks should this committee consider as it crafts legislation to protect our broader economy and our traditional finance system from the volatility and instability of crypto assets? What safeguards would you recommend, especially with regard to the volatility of crypto to perhaps take down the entire financial industry?
Thank you for the question, Representative Lynch. First of all, I think with respect to the banking system, we certainly don't want banks investing in crypto on the asset side of their balance sheet, meaning, buying crypto or otherwise making investments. I think with respect to other issues like services that are for a fee, like custody or payroll services, I think assuming that we put in a good comprehensive framework on stablecoin issuers so they manage their risks, and on crypto trading platforms so they manage their risks, I think those kinds of banking services, can be done. And
having a firewall between the crypto side and traditional.
Absolutely, absolutely. And we need to address affiliations and so forth. But your point on the concentration of deposits, that's why it's not enough for a stablecoin issuer. As the Stable Act says, you can have bank deposits, you can have all these things, but it doesn't have any rules on concentration or customer concentration. So I'm quite concerned about that. I think this all comes back to looking at this comprehensively and looking at the fact that we really don't have a regulatory framework for a lot of these crypto firms, and we've seen a lot of fraud and manipulation and problems as a result of that. So I think it has to be done in building blocks. I applaud the committee for starting with stablecoins. I would get that piece done and then turn to the market structure issues, because those are a little more complicated, and I think we'll learn a lot by getting the stablecoin piece done.
What about the contagion piece of this, where you have banks that have access to the discount window, you have FDIC insurance, you've got, and then on the other side of the house, if you've got volatility and instability, you've got sort of co-mingling or association between various crypto companies, so that there's a domino effect that could result.
Yeah.
It actually
there clearly is.
Runs into the traditional finance system.
Right. Well, two things. One, that's because of the lack of transparency about this industry. I mean, sure, the blockchain is transparent in the sense that it's pseudonymous, but you don't know exactly what a lot of the relationships are and who's got exposure. There's a lot of leverage in the crypto industry, and we don't track that. Even in the ETF market, there's a lot.
Do you think there should be a prohibition on government bailouts of crypto firms?
Certainly there should be.
Okay.
But the other thing I would comment on is, with respect to the banking sector, we really don't want banks exposed to the credit of this industry. And that's why I would limit it to, sort of services that are fee-based or, taking deposits that are in dollars, as long as, again, we have some concentration limits.
Thank you, Mr. Chairman. I yield back.